Hi, Rishi. May I start?
Yes, sir, please.
Yeah. Hi, very good morning to one and all. Thank you for joining for this YouTube live session. This session is mainly, about our in-house count-based research strategy in Spring platform on ICICI Direct. So if you log into ICICI Direct, you'll find into FNO segment wherein we have this Spring platform within which you find these automated quant-based strategies. So that is what I'm going to present it to you. Before starting or diving deep into the strategy, I would highlight why there is a need for this kind of strategies, and why do we do this. So we do this because many times many of you would not be having much of the time to trade in the markets, and you're not able to. Probably that is one reason, or second reason can be one very important thing which is required either in trading or investment is a very proper discipline is required while trading into the markets. As in, whenever you think that yes, market have come to a good level, you should be entering, then you should be entering. When it has come to a good level to exit, you should be exiting. So these personality traits, trading or investment, I would say discipline are required. Many times psychologically a very important role, or human emotions play a very important role, wherein one is not able to take these kind of decisions at the right time, right? So in quant based or algo based strategies, I mean, wherein you have wherein the logic is already set, it's well back tested, is exchange approved. So we've taken care as much as we have while creating these strategies, and putting up in our platform, so that if you are not able to basically trade into the market, or make profit in the market in a disciplined way, consistently, then when these strategies are designed for those who are not able to do those things can do it. So in here you do not need to be in front of the trading screen always, and if you are not able to control your emotions while trading, I mean, these are the kind of strategies which really help you out. So one of such strategy, friends, which we have um, created is expiry day strategy. We have put up on a Spring platform. As I said, it's available on ICICI Direct on the website. You go to the FNO segment and you will find this strategy. Now let's understand this strategy a bit. So what is the agenda for discussion about this strategy today? So I'm going to provide you the overview about the strategy. Okay, sorry. I'm going to tell you that for whom is this strategy, which I've already explained quite a lot in detail at the start. What is the rationale for this strategy? Because it's always good to know that what are we trading, what is the logic behind it. So we're being as transparent as we can. What are the inputs required? What are the do's and don'ts of the strategy, and how does it work? So these are the 6 points which I'm going to discuss today with you on in this very YouTube live session. Yeah. So let's have an overview about the strategy. So the strategy name is expiry day strategy. Okay, expiry day special, expiry day strategy. What is it about? So see, it's an intraday strategy. First of all, we have not created a strategy wherein you are creating a short straddle. So this is a short straddle strategy. Rather, I would say it's a moving short straddle strategy. So when you're doing a short straddle, you're not hedged. So it's always good to have an intraday strategy rather than carrying this naked shorts overnight. So it's an intraday strategy, as I said. Point number one: created for trading the expiry days. So as we know that NSE has mainly 4 expiry days for different indices. So first is Monday we have Midcap Nifty, Tuesday we have Fin Nifty, Wednesday we have Bank Nifty, Thursday we have Nifty for these weekly expiries, right? So we have chosen 3 indices in this: Fin Nifty, Bank Nifty, and Nifty, right? So Fin Nifty will be traded, I mean, automatically on Tuesday, Likewise, Bank Nifty will be traded automatically on Wednesday, and Nifty will be traded automatically on Thursday with the same amount. You don't require different amount for different indices. With the same amount, you'll be able to create these strategies intraday. This is an expiry day strategy, so it will be happening on the expiry day only because the overall theta erosion happens on the day of expiry, wherein most of the strikes go to zero. All the ATM and OTM strikes go to zero, whether it is called or right. So that's point number one. That is the overview. Now, second is like for whom is this strategy? For I've already explained this right at the start, very much in detail. This is for those traders who would want to benefit from the maximum theta decay in a day. And as I said, it happens on the day of expiry because almost everything goes to zero. Almost everything as in ATM and OTM goes to zero. So this strategy is for them who would like to benefit out of it on the day of expiry. And it's an intraday strategy, so the risk reward is properly managed. Those traders who wish to generate consistent returns on expiry days, it is for them as well, right? So see, we all know that the inherent nature of the options, or the fundamental logic behind the options trading is that 33% of the traders lose money, 66% of the traders make money. So these 33% are the buyers, because the probability of winning fundamentally, I would say, or as per the overall setup, is just 33% for the option buyers. Why? Because see, when you are buying a call option, your probability of going right is 30% as such, because when you're buying a call, markets basically has three kind of trends: uptrend, downtrend, and sideways. So you're making money only when markets go up. If market remains sideways or if it goes down, so you'll not be making money on call option, and vice versa for the put options, right? So its chance is like 1 on 3. So that's 32%. When you're selling options, so selling call option, if market goes sideways or goes down, you're making money, and vice versa for options. Hence 66% there. So what I would say is that consistent returns are generated through option selling, but of course there has to be defined stop loss as well, because the losses in selling options are unlimited, and hence we have kept this intraday, and we have kept this moving short strategy. So we are also moving along with the index move. Yeah. So it is for those traders who would like to benefit maximum from the theta decay, those who want intraday strategy, those traders who want to have consistent returns, those traders who do not have time to do it on their own by gauging the market trend, and those who do not wish to have any overnight open positions, just for them. Right now, we understand a very important part, the rationale of this strategy. That's the agenda number 3. What is the rationale of this strategy? So, as I said, since all the ATM and OTM options strike expires worthless on the day of expiry, so to benefit from the theta decay, a moving short strategy is initiated on the expiry day. So the main rationale is to maximize the returns, because this ATM and OTM strikes goes zero. Now during the day, what do we do is, here the strategy manages a delta move of the index and initiates short strategies with index move. So initially what happens is, initially a short strategy is initiated. So say this strategy actually starts at 9:20 in the morning. So at that point of time, or maybe after that, any time after 9:20, it would initiate a short strategy, depending on where the underlying is at that point of time. So it would initiate a short strategy, right? Now, if the index moves up, okay, so by a certain number of points, which can, and if it fits as per a logic, then it would exit from the losing position. So see, if you have initiated a short strategy, okay, if the index move up, so short strategy is what? Basically, you have initiated, you have sold a call and put of the ATM strike. That is what is short strategy. So when you sell ATM call and put options with the same expiry, it's called short strategy. So we do it for the same expiry on the expiry day. We do a short strategy. Now, if index moves up by a certain number of points, which position will be a losing position? The call option, right? So you exit from that position and you initiate one more short strategy at that point of time. So now your number of legs which will be open will be 3. So your loss you have limited up to the stop loss. Okay. So there is no unlimited loss, and you're initiating again one more straddle. If it goes beyond further on the upside, again the losing position will be on the call side, so you will exit and create one more short straddle. So this you have done it 2 times when it goes up. Likewise, you can do it 2 times when it goes down. So if you initiated a short straddle, if the index moves down by a certain number of points, then you exit from put options, continue holding your winning position that is short on call, and initiate one more short straddle. If it goes down further, initiate one more short straddle. So likewise, the first position is already you have taken at 920 or post that. And after your initial position, you can have either two more short straddles on the upside or two more short straddles on the downside or all of them. But at any given point of time, you will not be having more than 4 legs open, right? So that is what is called a moving short straddle strategy. So wherever the index is moving, you are exiting the loss-making leg and you are initiating one more strategy. Exiting a loss-making leg, again if it goes up, you initiate one more strategy. So that is what is called a moving short straddle. So I've made you understand what a short straddle is, what do we do, and why do we sell short straddle? Because ATM strikes have good enough premiums. We're not doing with the ITMs. ATMs, OTMs doesn't have much of the what do you say premium on a day of expiry any which ways. So ATM is what we sell. And when you sell ATM call put, as I said, it is called short straddle. And when you move it along with the index movement, it is called moving short straddle. And this, as I said, you do it 2 times on the upside if it goes that much, and 2 times on the downside if it goes that much. If it doesn't go anywhere much, if it just remains there, then you're already making money because you sold ATM call and put option. That is, you already sold a short, you already initiated a short strategy. So the idea is that if index trades sideways, which maximum over time index does, then these premiums will fall and profit will be made on the premium credited. Now, indices, if you check historically, I see I've checked it until March 24. Okay, past 5 years data. Then maximum amount of times you see on the expiry day, index basically trades within a range of 1.7 to 2%. Okay, so it doesn't move beyond those levels. So 2% right now will be 500 points. So that's the range. That's the range of high and low. So 5%, 500 points is 1% up and 1% down, 2%. So that is the delta within which we'll be basically trading this strategy. Yeah. Now, the last point of this rationale of the strategy is that since the loss is unlimited, where the profit is limited up to the premium created. So, as I said, we have made this strategy very dynamic with the movement of underlying. So, if it goes up, we initiate a further short strategy. If it goes down, we initiate one more short strategy and exit the loss making strategy. So, these points I've already covered slide, and yeah. So if there is a movement in the index up or down by certain points, then a fresh short straddle is initiated. As I said, so if it goes down by a certain number of points, a short straddle is created. If it goes down, a short straddle is created. How many times? As I said, a maximum 5, not beyond that. Now, if Nifty keeps going up, and goes up by 1,000 points, we would not be creating short straddle again and again. We would just exit from a loss-making legs and keep open a profit-making legs and ride it until 315 because it's an intraday strategy. The time limit set for exiting the strategy is 315. Okay, 3:15 p.m. At any given point of time, as I said, not more than 4 legs will be open. So we exit the loss-making leg and ride the profit-making leg until 3:15 p.m. Most of the time, indices trade within a range, as I said. I mean, the 90%, 95% of the time, Nifty trades within the weekly range is 1.7 to 2%. Hence, this strategy is expected to provide consistent returns with relatively less risk. As I said, this strategy is to trade the expiry mainly 3 indices: Nifty every Tuesday, Bank Nifty every Wednesday, and Nifty every Thursday. Now, in case there is a trading holiday, this is a very important point, and please understand this properly. So, in case if there is a trading holiday in any of these about days, then the expiry will be shifted to the previous day. So, as we know that this week we did not have a midweek session, that is Wednesday. So, the expiry of the Bank Nifty for this week was shifted to Tuesday. So on Tuesday we had both Fin Nifty and Bank Nifty expiry. So as we have a weekly expiry for a Nifty today, Bank Nifty actually had it yesterday, but yesterday was a holiday, trading holiday on account of Muharram. So the Bank Nifty expiry was actually shifted one day prior. That is what happens. Now in those cases wherein an expiry is shifted one day prior, the priority is given like this: Nifty first, Bank Nifty second, Fin Nifty last. Okay, so since Tuesday, had it been just Fin Nifty expiry, then we would have traded Fin Nifty automated. But since Nifty and Fin Nifty and Bank Nifty both expiries were on Tuesday, so the priority was given to Bank Nifty in the order of Nifty, Bank Nifty, and Fin Nifty. So there was no Nifty expiry. So second was Bank Nifty. So the trading strategy was on Bank Nifty and not on Fin Nifty. Because Fin Nifty is the last priority, right? So that is what it is. Now, approximate gross drawdown. So that's very important again for you guys to know. See how much return will it make? It will make a decent return, is what we think. Okay. But all you need to understand is the loss. So that is very much important. So this strategy requires 5 lakh rupees. In the absolute terms, 5 lakh rupees in your account now. Whether you can take a intraday leverage based on the collateral of your equity and all that, yes, you can, and you can check with your RN for the same. You can definitely, if you have 1 crore shares, 1 crore as of now, and all are top quality Nifty 50 stocks, for example, then you definitely get leverage on that, and you can definitely use that for trading this strategy. How much leverage, what not, you can consult your RN for the same. But then 5 lakh is what is required as a margin for this trading this strategy. Now, the gross drawdown annually for this strategy based on the historical data backtesting is 50,000 on a gross basis. So gross means that there is no transaction cost, impact cost, or taxation part or whatever, is brokerage. I mean, transaction cost includes everything: brokerage, STT, stamp duty. So that plus the impact cost is not calculated in that. So it's not considered in that. It is just pure entry and exit, right? So that is 50,000. So like that is around 10% of the overall capital required or margin required. Excuse me. Who are trading this strategy? You can take 2, 3, 4% depending on your slabs, tax slabs, or maybe your brokerage slabs or whatever. So it can be 12 to 14%. Okay, that is the risk. Okay, that is a drawdown. If that happens, your strategy will be stopped. Then if you want to do it again, you can again do it, right? This is like for the overall year, entire year. For a particular day, it's been like 10 to 15,000. Okay, so any of the expiry or expiries can be of that kind of a day wherein there is too much of high volatility. The loss can go up to 10,000 rupees, which is around 2%. 2 to 3% on an intraday basis is the risk, and 10 to 14% gross to net is the overall yearly risk for this strategy. That is very much important to understand, and that hence we have highlighted that. But it's not much, 10 to 12% in a year. Now we move to next agenda, that is do's and don'ts about this strategy. So what to do? Obviously, the opposite will what not to do, but it's always better to understand. So that since it is repetitive, but it fits into our brain, into our head, right? So one should consistently initiate the strategy in order to have a better performance. Okay, I mean you cannot do it based on your emotions again here, or maybe on your mood here. That today I am in a good mood, I'll be doing this strategy. Today I'm not in a good mood, I'll not be doing this strategy. It shouldn't be done that way. In order to have consistent returns, you should be consistently initiating this strategy to have a better performance. As selecting the days when to initiate the strategy based on intuition is not recommended. This strategy is developed to help the traders to do the disciplined trading. Hence, consistently initiating the strategy is advised. Now, the only discipline which you require to do this strategy is that you need to do it every day. Or every day as in all these 3 days when it is required: Tuesday, Wednesday, and Thursdays. So that is the only discipline. The rest of the things are taken care by the logic of the strategy, which we have already built in. We have taken approval from the exchange as well for the same. So it's an exchange approved in-house on-based strategy of ICICIdirect. In order to have a smooth working of the strategy every day, one needs to check and maintain the required margin. Now, see, if margin requirement is not there, I mean, it would not initiate the strategy in a proper way. In account, so if the proper margin amount is not there in the account, if you, it will definitely affect the strategy performance for that particular day, right? Now, if you miss to log in before market opening, say this strategy, as I said, starts at 9:20 a.m. So you generally log in before 9:20, I mean 9:10, 9:15, 9:19, right? If you miss today by 9:15, 9:20 because you forgot, or maybe you were not in a proper network area, you could not log in. Even if you do it at 9:30, it's fine. 9:35, I mean 9:45 tak chalega. You can do it. Okay. We initiate this study as soon as possible, as it would then take up from that point of time. Okay. But then it is not advisable to exit from the strategy on your own. Oh, I'm getting 1,000 rupees profit at 10:30, I will exit on my own. Wow, I'm getting profit of 2,000 rupees at 12 or 12 noon, I'll exit on my own. And then you again re-enter at 1 p.m. These things, again, I mean, see, this is created for you to not encourage trading on your own. Let the system do it. And now in that system, if you again enter and re-enter and exit, it's not advisable. Then it's not solving the problem. Okay. What not to do in this strategy? So do not maintain less than required margin in the account, as failing to have kept the required margin will affect the proper execution of the strategy, and one would thereafter be required to close the position manually. So, margin is required. Do not close the strategy, as I said, in between looking at the profit and loss. Oh, I'm losing 5,000, I'll better exit. Don't do this. Until that point of time, as it's doing so may affect the overall performance of the strategy. Do not exit and enter at regular time intervals. Again and again, we are saying that. So, two very important things are that, see, log in timely, maintain margin, and not interfere. That is, enter and exit on your own. Most important points. This strategy has a defined entry and exit time, that is starts at 9:20 a.m. ends at 3:50 a.m. Hence, once entered at 9:20 or thereafter, due to some reason exiting before 3:50 on your own is not advisable. What are the inputs required? That's the final point, I guess. Yeah. No, the second last point of the agenda. So this action, the strategy is to execute every Tuesday, Wednesday, and Thursday, as it is specially designed to build the weekly expiries for Nifty by Nifty. What is the product type? It is FNO select from intraday. What is the margin required? Here the margin required is mentioned as 4 lakhs and multiple of 4 lakhs, 4 lakhs, 8 lakhs. But I would update that because we updated that to 5 lakhs, so it would be 5 lakhs, 10 lakhs, 15 lakhs accordingly. Start and time and end time would be, it starts at 9:20 a.m. So it can trade anytime from there, and it would automatically exit all the open positions by 3:15 p.m. And there is where you come to know whether you made a profit or loss, that expiry or not. This strategy is specially designed for trading Fin Nifty, Bank Nifty, Nifty. Yeah. And the final point is, how does it work? So as I said, the ATM strategy is entered for the current expiry at or after 9:20 a.m., which is the start time of the algorithm. The algorithm keeps checking the index movement. As I said, if it moves up by a certain number of points, it will exit from the call option, create one more short straddle. If it again moves by a certain number of points, it will again exit the open call positions and create one more straddles, and vice versa for the put side. So it keeps checking the index movement for the stop loss on the current straddle as well as new straddle execution condition. The algorithm stops automatically at 3:15, which is a stop time or whenever the stop losses are hit. That is all from my side. Thank you so much. If at all there are any Q&A, we can take that up. Yeah. Thank you. Over to you, Rishi.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.